oil prices may have peaked out, but when it was hovering around $75 a barrel, it caused enough damage to corporate India's earnings. Not that it was all bad. There were a few companies that benefited as well. Soumeet Sarkar is here, standing by to tell us how oil has changed the fortunes of companies in this September quarter. Soumeet.
So we had done this link a while back when we had pointed out sectors that might get impacted because of higher crude prices. Now, as the second quarter earnings have come out, let's see what the impact was on these companies. Now, first the oil producer, that is ONGC. Now, higher crude prices aided companies' net realizations and margins. Now, if you see, the company's net realization was the highest ever at $73 per barrel due to no subsidy burden, while the EBITDA margins expanded to 56.4% because of higher crude prices seen in the second quarter of financial year 2019. Now, the user industry, that is first is the aviation companies. Fuel cost is more than 1/3 of the total cost and thus severely impacted even the most cost efficient airline company, that is Indigo. Now if you see Indigo's fuel cost per seat kilometer, now that was highest in the last 15 quarters, which Indigo reported in the second quarter, while the company also reported a net loss for the first time since listing. Now company's expenses were higher by nearly 900 crore rupees because of higher crude prices in the second quarter. Now second is the lubricant manufacturer like Castrol India. Now the crude is the main input material for lubricant manufacture, and the rise in crude prices led to a decline in Castrol's gross margins for the third consecutive quarter. Now in the second quarter compared to last year, Castrol India's gross margins were lower by nearly 560 basis points. Now third is the paint companies. Now Asian Paints, Berger, Kansai Nerolac. Now the crude related raw materials account for nearly 50% of the total cost for these paint companies. Now here if you see, Asian Paints was least impacted as they had taken some price hikes, but Kansai Nerolac was impacted the most because of their exposure to industrial products, where taking a price hike is a bit difficult. Now if you see for Berger, their gross margins were also lower by more than 400 basis points compared to last year. Fourth are the tire companies. Now they use synthetic rubber and carbon black, which are again crude derivatives. Now because of higher crude prices, the prices of these derivatives also surge up, which in turn impact their EBITDA margins. Now if you see on an average, the EBITDA margins for these tire companies were lower by nearly 200 basis points compared to last year because of higher crude prices. Lastly, the cement companies. Now we missed out on pointing this sector which actually did get impacted because of higher crude prices. Now a rise in crude prices directly or indirectly impacts cement companies in various ways. So on an average, we spoke to analysts and they say that around 40 to 50% of the total cost of a cement company is directly or indirectly related to crude. Now the impact, if you see, now for India's largest cement company, that is Ultratech, margins were low by nearly 470 basis points. For Dalmia Bharat, it was low by nearly 590 basis points. Ambuja's margins took a hit of only 100 basis points, but that was because of the cost-cutting initiatives taken by the company. But if you even consider Ramco, which is one of the largest cement company in India, their margins were also lower by more than 600 basis points compared to last year.